is on right now. If you're tuned in, every Tuesday just after our network news, we start talking money issues with Insight Partners Africa. Good morning. You're tuned into the Ndalama Insights, and here we talk about personal finance, investment, and economic trends. My name is Lina Zulu, and today we're diving into one of the most talked about, well, not so talked about, financial developments of the month, and this is oversubscription of Zambia's October GRZ bonds. Okay, so the government aimed to raise 1.3 billion kwacha, but received 5.9 billion kwacha in bids. This is a massive oversubscription. Yeah. So what does this tell us about investor sentiment and our bond market dynamics? And why are investors bidding at lower rates? So joining me this morning is financial expert and our resident analyst, Mukonkela. It's always a delight having you on the show, Mukonki. How are you?
I'm good, thanks, Lina. Those that are watching us online, we're in a new studio, eh?
Right.
Yeah, it's nice to be
close
to you.
We can even do a high five.
Let's keep this. Let's keep this.
I know Vincent Nalora is listening. Yeah, so
yeah,
it's beautiful.
Yeah.
So oversubscription, Mukonki.
Yeah. So interesting thing happened in October, Lina. So for those that have been following our GRZ bond market, you may know that every 6 months we get a coupon income or an interest on the money that you lend to the government. Yeah. That is what we call the coupon rate. So in the past, government has received oversubscriptions, but it doesn't really spark much interest compared to the October results. This is because in October, the oversubscription was accompanied by lower interest rates or coupon rates. Okay. Now, what happens is when you lend money to the government, it goes through an auction process. So we have interested investors who go through a bidding process. So in October, government was looking for 1.3 billion Zambian kwachas to borrow from the local market, but they received an oversubscription amounting to 5.9 billion. That's almost 5 or 4 times more than they had wanted to get from the local market, right? Now, what was interesting is that this October bid was accompanied by lower interest rates or coupon rates. Why is it that some bidders are willing to take lower interest rates? And when I say lower interest rates, what I mean, Lina, is that when you are bidding to lend money to the government, you are looking for a good interest rate on your money.
You want to grow your money.
Exactly. So what guides you in terms of how you determine the interest rate to get from lending money to the government is the existing or the market rates. So what's on the market? You can actually compare it to anything else. Let's say dresses, chitenge material dresses, maybe fetch for a certain price, right? We know that that's the local market. Or if you want to make a good dress from a tailor, this is how much they charge within this range.
Right.
And then all of a sudden, you find tailors accepting lower amounts. If doing a dress from a tailor is 500 kwacha, all of a sudden they are willing to take 200 kwacha. So the question is why? Why are you willing to take a lower? Why are you willing to bid? In fact, to bid a lower rate. So what happened in October is that bidders were bidding lower interest rates. They were willing to lend money to the government at lower interest rates, and this was very interesting. This is a very interesting development.
Has it ever happened before?
No, not that I'm aware of. Right. It might have, but at least not in the past few months. So in the past few months, we've received oversubscriptions generally, but it has also matched the market rates. The coupon rates have matched the market rates. They've not come down. Right. So I'll give you an example of the 15-year bond. Traditionally, in the past, it's been fetching around 27%, but in October, it was fetching at around 23%. That is the lower interest rate that we're talking about.
Yes. All right. So then, why would investors willingly accept lower returns in the market environment? Is it about security or is it something else?
So it's a combination of factors, Lina. First of all, I think news is really getting out there that you can make money from government bonds in Zambia. So I think people are getting to know. There's a lot of awareness. many people are talking about investing in GRZ bonds. So I think the message is getting out there, and I'm happy that we've actually contributed towards this.
You've done your part. And like
you and I and everybody, the entire ZWBC, I think we've done our part to get the message out there. I think that's part of it, and also the fact that people are starting to understand that investing in GRZ bonds is actually a pretty stable investment. It carries lower risks, and it gives you a good return compared to other investments. So people are willing to even receive lower interest rates.
And it's very secure, eh?
Because of the security, perhaps. Because of the
secure.
security, I know I'll get my money back. I know I'll get my coupon guaranteed every 6 months without any question. So I would rather give my money to the government for the security sake. So I think those could be the reasons why.
Because over a long period of time, you know that, okay, even if it's a bit lower, I am guaranteed that I'm going to get this money back and it's growing. Fantastic. Okay, so let's now look at the impact on local investors and future auctions. What does this mean for local investors? Is the trend of lower yields something that we expect to continue, and how might it affect local investing going forward?
So this is really very interesting for the local investors, and it's something that is worrying quite a number of people. I mean, you in the past you were getting 27%. All of a sudden, these rates now are coming down to 23%. Now, why is this worrying? Let me just go back a little bit, Lina, because when you are bidding in the GRZ bonds, we've got two kinds of bidders. We've got competitive bidders. They're the ones that offer rates and amounts. These are the ones that determine the coupon rate that we're going to get in the market. And then there are non-competitive bidders. So these are bidders, generally majority of us, if you're going to invest less than 500,000 kwacha, you compete as a non-competitive bidder, meaning you take the rate that the competitive bidders will have set. You understand, right? So for us, the non-competitive bidders, we've got no control over the interest rate. It's a big worry. Why are these competitive bidders bidding lower rates? We want to make money, so why are they bidding lower rates? So it's a really big concern. And if this trend continues, and I expect it to continue in the shorter term, we expect that investors are going to start looking at other investment alternatives that give them better interest rates.
I think so too.
Because investing is really about getting a return on your money that you want to get. So if you had planned to get 27% and what's on the market is 23%, you definitely start looking elsewhere where there are better rates. Yes.
And it will impact. It
will definitely impact your investment portfolio. Because remember, Lina, we've been talking about creating an investment portfolio and the target of how much you're trying to make, right? So that would definitely affect your overall incomes that you want to make. All
right, so let's now look at potential risks for local investors if this trend does continue. The outlook.
So the outlook, as I've said, is investors will start looking at other investments. Less, they might even look at investments which are more riskier, carry more risk and more interest rates, right? Which might not be good. And also the other risk is it will affect your investment portfolios because the income you had planned to get at higher interest rates is not what is going to be if this trend continues. And
does it have any impact on the central bank?
Yes, it does. I mean, the thing is, and I'm happy.
It looks like it's been trickling in, but then this time around it's like chock-a-block.
I like that you've asked that question, Nina. This is sparking a lot of interest, mainly because you see, interest rates are set by the market, and central bank once in a while looks at interest rates. They revise them upwards. We call them the monetary policy rates. They revise them upwards or downwards. And in the past, the trend has been going up. The MPR has been going up. So we naturally expect bond rates also to follow suit, not to come down. So it's a really weird dynamic.
I know you're going to research it. Like if it's worrying, like there should be more to this.
No, I'm already researching.
I'm
already researching that. I know we could say there's a lot of investor sentiment and interest in GRZ bonds, but I like to look at other underlying factors. I mean, because we have large institutional investors that determine our coupon rate. What is their interest? Why do they want lower interest rates? For me, that's the question I'm asking myself. And as you've said, I'm going to dig deeper.
I trust you. I honestly trust you. All right. So as a financial expert, now give us advice as local investors. What would your advice be, you know, as you watch this trend closely?
So, Lina, we've always spoken about reviewing your investments. Huh? This is time for you to review your investments. Exactly. This is now, my advice is really to be adaptable. You need to look at your portfolio. If you really feel like this is not making sense to me, it's time for you to review your investment portfolio, start looking at other investments. But unfortunately, in Zambia, Lina, we've got very few investments that might give us the rates that we're getting from GRZ bonds at the moment.
Unfortunately, yeah.
So
this is like our go-to place.
Yes, it's like our go-to place. It's our comfort place. I mean, you can buy shares, you can invest in property. Those are alternatives, by the way. So if you've got enough money, property perhaps, shares are other alternatives that you can look at. But in terms of secured investments, bonds are really our comfort place to go to. So be adaptable. Review your investment portfolio. If you feel it's something that is not making sense to you, you can always sell on the secondary market. In fact, this brings me to another point, and I hope we've got time, Lena. You see, those people that have attended my classes, I teach GRZ bonds and shares, and this month actually we're having a workshop on the 28th and 29th of November. You can call me if you want more details on this. Invest in confidence in GRZ bonds and shares. So what I teach is also how to sell your bonds on the secondary market. And this is very interesting.
Like it looks volatile and you feel like you want to sell.
So let me give you a practical example. So if you bought a bond maybe a year ago, or let me say a few months ago, since we're under the new system, a few months ago, you bought a 15-year bond at 27%. Now you really want your money back. Remember, these rates, the coupon rates are coming down.
Yeah.
The Bank of Zambia is selling at 23%. You have a bond. You are currently holding a bond you bought maybe in January or in March. That is at 27%. And right now, BOZ is selling the same 10-year bond at 23%. It means that your bond is more valuable. And if you had to sell your bond today, you definitely get interested parties to buy it because they'll be getting a higher coupon rate compared to the coupon income that they'll be getting if they got this October 15-year 10-year bond. You understand, right? I hope you get it.
Yes,
so this is why it's very important for us to really understand.
So you can actually sell.
Yes, you can. Yeah. So you can sell your GRZ bonds and you can make a huge profit. As you've seen, October rates have come down, but for those that already hold,
you're like, oh wow, yeah.
so as we start understanding our markets, like I always tell you, Lina, I mean these are things we also need to understand. The secondary market, you can also make money from there if you hold a very valuable bond. You understand, right? Yeah.
Makes a lot of sense. Today has been fantastic. It's been explosive, as usual. Thank you so much, Mukonki, for breaking down such a complex topic. Maybe some people didn't even know that it's actually, the interest rates are going down.
Yeah.
So, yeah. I think our listeners and, of course, those that are watching you via YouTube have gained valuable insight into what the October bond oversubscription means for the market, and especially for the local investors here in Zambia.
Yeah, I've got feedback online, Lina. Can I quickly? So I think this is Ako Jr. who's saying, I think one reason why we are willing to get a lower interest rate could be due to the current leadership. Looks to be stable, but that's my personal opinion. Yes, that is, we all have personal opinions, right?
That's investor confidence right there.
Investor confidence. I like that. You're getting it.
Girl.
Yes, girl.
Falls on deaf ears. No, it doesn't.
Investor confidence. I like that combination of words.
My attention span is very high.
I love that. Lena is getting it. It's investor confidence. Yes, very fantastic. Yeah.
All right, so that's that with Mukonki on today's edition of Ndalama Insights. Remember, interestingly, wisely, you have to start understanding the trends and factors shaping our economy. Yeah. So for those of you that are interested in more financial insights, follow Ndalama Insights and stay tuned. You didn't give out your number.
Let me do. And before I give out my number, Dina, one last thing that I think is very, very important. We can actually talk about this next week. I think this interest in local bonds could actually drive the government away from Euro bonds, which are bonds borrowing from outside Zambia.
Yeah.
Government now has got an interest from the local market. So why doesn't government increase their expectation? Instead of offering 1.3 billion, why don't they offer 10 billion?
You can see,
because there's interest. So and they will reduce their cost. They will reduce debt default, because if they fail to pay the local bond, they can print the kwachas.
Right.
They can't print dollars. So this is a big, for me, this is opening out huge opportunities for wide discussions, even for external borrowing.
Yeah, it's a huge leap. 1.3 billion to 5.9.
Yeah.
It's a huge leap.
So my number is 0977 44 5604. 0977 44 5604. Those that want to join us this month end, I will be talking about this workshop more in detail. So if you want to join me month end of November, invest GRZ bonds and shares, you are free to contact me and get more details.
Fantastic. So that's where we leave it for today. Until next week at the same time, on behalf of my guest, Mukonki Mukonkela, is goodbye and God bless.
You have been listening to Dalama Isa's Business Show, brought to you by Isa Partners Africa.